Sometimes people ask me, Brian, how do you add value to your customers when they can just go out and buy an index fund? And why shouldn't they do that? And my answer is, I agree that anybody can go out and buy an index and get market returns. I agree with that. Our goal is to outperform the index, the broad market, after our fees over the long term. And how do we do that? Number one way we do that is we concentrate our best investment ideas. We think it's silly to own 500, if you're trying to outperform the market, to own 500 stocks. If you own 500 stocks in the US, you're going to perform basically in line with the S&P 500. If you own 100, if you own 50, you're going to perform within probably 1 or 2%, maybe less than 1% what the S&P 500 is doing year in and year out. I don't know how an investment manager can outperform the broad markets without concentrating his best ideas. And so we try to own our top 10 to 15 ideas for our clients. And as a matter of fact, we eat our own cooking. We actually own those same companies ourselves. So that's the first thing we do, is we concentrate our ideas. The second thing that we think that adds value to our customers is we recognize opportunities. And when there's a company that represents a great value, a great opportunity, if you buy an index, that's typically not the case. You're buying the average of all the stocks when you happen to put your money to work. That's the second thing, is we try to buy when there's opportunities, when companies are selling below intrinsic value. The third thing that we think that adds value to our customers is we try to keep our fees low. Fees can add up over time, and we recognize that fees, if we have high fees, if we're charging a customer high fees, that puts us at a disadvantage for them to outperform the index after fees over time. So we try to keep our fees low and very reasonable. The fourth thing that we look at that differentiates us from a market index is we think long term. We think like business owners. We don't think of stocks being a squiggly line on a computer screen going up and going down, but we think like a business owner. And so we think long term, and when stocks go down, we tend to buy, especially companies that we feel like have represents a great opportunity in the future.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and/or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.